column of the wages in the general ledger, and that's in S9 equals, then I'm going to point to the wages in our transaction, which is in cell D11, so that equals cell D11, and enter. So there's the 600 went up, and we're out of balance, and we can see that 600 has now been posted here automatically. That's coming from there, and we are out of balance by the 600 until we post the other side, being to cash. So cash is here. This is the general ledger. Here's the cash account in it. Now we're in the credit column of cash. I'm just going to go underneath in the next transaction in cell L11, say equals, and point to this credit of 600. And once we hit enter, it's going to go from 110 down in the credits. So we say enter, and there it goes down. This is why a debit balance account is always a debit balance, because if we add up the debits and we add up the credits, all we do is take these and subtract the credits, and the debits are always going to win. Now, you might argue that. You might say, well, what if I paid cash of $110,000, I wrote a check for $110,000, then the credits would win. The credits would go down. But if we wrote a check for more than is in our checking account, what really happens is not that we have a negative asset or an asset with a credit balance. We now have a liability that we owe the bank back. So it would flip from an asset of cash to a liability of we owe the bank, whatever the difference is. So let's take a look at the next transaction. Receive cash for work will be done in the future. So now we got cash. Once again, is cash affected? Yeah, we received cash. Cash is debit balance. We're going to make it go up by doing the same thing to it. In this case would be another debit. So I'm going to right click on that. I'm going to copy that. I'm going to put our cursor right here in C14, right click, paste it 1, 2, 3. Then we're going to type that amount. What is it? 15,000. And if we debit something, we're going to credit something too. So I'm going to go in the credit column, put a negative, and I'm going to go left arrow once, up arrow once, negative of that number. So we're saying I want you to take what's in cell D14 and flip the sign, multiply it by -1 in essence. And then the only question is, what should that account be? Why are people paying us $15,000? Because we're going to do work. So you might think that we should credit revenue, which would increase revenue, but under the revenue recognition principle, we have not yet earned that revenue. Therefore, we're going to put it into a liability account up here. Why would it be a liability? Because we got something now and we didn't give anything. Therefore, under a business transaction, we owe something, and that something is going to be owed in the future. That something being our service. So we're going to say that's a liability. Liabilities have credit balances. It's going up because we owe something. How do we make something go up? We do the same thing to it, which in this case would be another credit. So I'm going to copy that. I'm going to paste it right there. Paste it 1, 2, 3. Then we're going to post this journal entry to the general ledger, first posting the cash. So here's the cash account. This is in the debit column. And so we're going to go to the cash debit column. I'm going to go under the last transaction in the debit column there in cell K12 equals, pointing to the cash of 15. What's going to happen? Well, that's a debit. This is a debit. That's going to make the debits go up in the debit direction to 124.4. Then if we take a look at that, that's going to be posted there. We can see that's where that came from, already posted. We're out of balance by the 15, of course, until we post the other side. That's going to unearned revenue. It's in the credit column. Unearned revenue, it's in order, assets, and then liabilities. Liability here, we're in the credit column there in cell P14. So we're in the general ledger in unearned revenue, account of the general ledger in the credit column there equals, we're going to point to this credit, and that's going to make us go up in the credit direction. So enter, and it also posts it over here because this is formatted for you already, pulling that 15,000 over here. That puts us back in balance. No effect on net income from that transaction, even though we received cash, because we haven't earned it. When we do the work, we'll take it out of here and we'll put it into revenue. So then next transaction, paid cash for utilities. So is cash affected? Yeah, we paid it. Cash has a debit balance represented by the fact that it does not have brackets. We need to make it go down, so we're going to do the opposite thing to it as what it is, which is a credit. Right click, copy that. I'm going to put it under the E, so I'm going to put it on the bottom of the E. I'm going to right click, paste it, 1, 2, 3, values only. And then we're going to go in the credit column and put a -750. So if we credit something, we're also going to have to debit something. I'm going to put the debit on top, right next to the E in cell D17, negative, down 1, right run 1, there's the debit. So I want to say take what's in cell E18 and flip the sign. So then the only question is, what should that debit be? And it looks like it's utilities here. So what's the account for utilities? We have utilities expense. So there's the expense, and we can see that expenses all have debit balances. They generally only go one way. They go up. They go up in the debit direction. So how are we going to make it go up? We're going to do the same thing to it, which in this case, which is another debit. We already knew that because we credited cash, and now we have verified it, so we can copy that. I'm going to paste it in cell C17. C17 is right there. Right click, paste it 1, 2, 3. Now we can post this general journal to the general ledger, starting with utilities expense. It's in order. Assets here, liabilities in orange, equity, then expenses. So expenses are way down here. Utilities expense, we're in the debit column of it. So we're in the general ledger, utilities expense, debit column, cell S15 equals. Then I'm going to point all the way back over here to cell D17, and that's going to bring this balance up. So I'm going to say enter, brings it up to 750. That 750 gets posted here. We can see where that's coming from right there. And it brings net income down. So notice net income is revenue of a credit minus the debits of the expenses, giving us 8650. 8650 was decreased by that expense. Now we're going to record the other side being to cash in this case. So we've got the general ledger, we've got the cash account. This is in the credit column. So I'm going to go under the last transaction in the credit column in cell L13 and say equals, point to that credit. This is a debit, that's a credit. It's going to make this go down like so. So there, now we're down to 123,650. We can see that's being now posted there, and that puts us back in balance here. That puts us back in balance here. All right. Now, last transaction paid cash for supplies. So is cash affected? Yeah, we paid it for supplies. Cash is going down. Cash is a debit balance. We're going to make it go down by doing the opposite thing to it, which in this case is a credit. Credits will go on the bottom. So I'm going to right click on C21, paste 1, 2, 3, put our cursor in E21, and I'm going to put a negative 350 and enter. Then I'm going to go above it and put some debit in it. Remember that the credits go on bottom out of tradition. I'm going to put negative, down arrow 1, right arrow 1, and enter. There's the 350. Now the only question is, what should that account be? We bought supplies. Where are supplies here? It's up here. It's in the assets. So it's green. It's up in the asset section. You might be asking, why isn't supplies an expense? When we paid for utilities, it was an expense. When we paid the employees, it was an expense. Reason is that if the supplies are significant, meaning they affect the decision making of our financial statements, they should be recorded as an asset similar to inventory, and then we record the expense as we use it, meaning we're going to count the supplies at the end of the period, see how much we used, then mark them down. If the supplies were very small and irrelevant in dollar amount, then we would just expense it. But we're going to simulate what happens to inventory up here. So I'm going to copy this. I'm going to paste it 1, 2, 3 in C20. And then we're going to post this general journal to the general ledger, starting with supplies, which is an asset. So cash is an asset, receivables an asset, supplies an asset. In the debit column there on K25 equals, then point to this 350. Then when we hit enter, this should go up to 350. That records the supplies there, and so that's coming from here. Then we're out of balance there, there, and there. We're going to post the other half being to cash here. So cash is on the general ledger in the cash account. We're going to credit it in the credit column. Under the last transaction, we're going to say equals and point to the 350 in cash. It's going to bring cash down, put us back in balance. So we say enter, brings cash down. Cash is now represented by this number there, back in balance because we have the green zeros. No effect on net income from that transaction because supplies is not an expense account. And that is that. Now, note that the cash account is a good example of what happens to the T account. Don't do this, but if I was to sum these up, just to give a demonstration, we're saying that the debits, and if we sum up the credits, what we're saying is that if it's like a race, we're saying that the debits are beating the credits by this 123. So if we summed it up this way, the debits add up to this, that would be the T account. We'd add up the debits, we add up the credits, then we're saying the debits are winning. So if you think of it as a foot race, we already know who's going to win if it's a debit balance account. It's going to be the cash is going to win over the credits. It's just a matter of how much they're going to win by. When we credit a debit balance account, it brings that debit balance down, meaning the credits are catching up in some way. You can think of it at that format. So, and the reverse is true, of course, for accounts payable. So when we look at accounts payable, which has a liability account, it could have debits and credits as well, but the credits will always win. So it'll be the flip of that.